Okay, thanks everyone. Our final panel session of the day will focus on what it will take to finance the energy transition. Today's session will be moderated by Anna Howry, CEO of Respira International. I'll just say a few words before we start. I mean, both the UAE and the UK have interesting stories to tell when it comes to financing the energy transition and indeed energy more broadly. This session will give further insight into this and hopefully identify, again, as with everything we do, some areas where both countries can work together going forward. This session will also be around 50 minutes in duration, after which we will hear some concluding remarks from our UK Chair, Lord Udny Lister. Thank you. Anna, over to you.
Great, thank you. Good afternoon. I've certainly found today very, very interesting so far, and I know we've got the last panel, but I hope you're all still, energized, because we get to talk about the exciting stuff, which is money. So far, we've heard, a lot about the scale of the problem that we're facing in order to transition to a low-carbon economy. We have to cut something like 21 gigatons per annum in order to have a chance of meeting the 2030 commitments. 1.5 degrees seems, really challenging to meet at the moment. And what we have been hearing today is that we have to up the pace, we have to up the scale. It's a team effort, and it really is a team effort. So it involves corporates, it involves governments, it involves people, and it involves capital markets. And I think that, right now we're in a particularly challenging macro environment. We've got inflation really starting to go through the roof. We've got rising interest rates, and in this context, we need to find the financing that we require in order to encourage the development of the new technologies that we need and the existing technologies that we need to scale and to get us somewhere towards achieving our ambitions and goals. So I've got a great panel of people here with me today who can help us address and explore some of these issues. I'm going to let each of my esteemed panel members introduce themselves. If they could just give a couple of minutes on your current role in your organization and what each organization is sort of thinking in terms of how we finance this energy transition. So I'll start with you, Rajat.
Sure. No, thanks, Anna, and good afternoon, everyone. And delighted to be here, and thanks for giving me the opportunity to participate in this panel. My name is Rajat Katyal. I'm a Managing Director. I head our EMEA Oil and Gas Investment Banking business for HSBC. I've been an energy professional for more than 25 years, and clearly this is one of the most interesting times in the energy industry I've seen, having seen a few $9 oil price environment back in the 90s to $140 in 2014. Within HSBC, we have, we see energy transition as a great opportunity. As a bank, we have come out and already stated our targets to be net carbon zero for 2030 or sooner for our operations and our supply chain. As part of that, we have also communicated very explicitly, clear targets in terms of our finance emissions. We have publicly stated that we will reduce our oil and gas finance on balance sheet financings by 34% by 2019 and by 75% per power on utilities. We see this as a great opportunity, and this, in twofold, where we firmly believe that we can help our clients to achieve their transition objectives. The two specific areas where we are focused on is working with our clients to analyze their transition plan to ensure that they are credible before they go out to the external world. And second is to help them on both advising as well as financing those solutions. As a bank, we have committed to, finance somewhere between $750 billion to $1 trillion of financings by 2030. And as of 1st of Jan 2020, we were in excess of $125 billion. So delighted to be here and look forward to the discussion. Thank you.
Shagil?
Thank you. Thank you for the invitation to be here at the panel. My name is Shagil. I'm the Chief Sustainability Officer at First Abu Dhabi Bank. First Abu Dhabi Bank is the biggest bank in the UAE and one of the largest in the Middle East region. We're also the first bank in the Middle East who's committed to net zero by 2050, which is quite interesting since we're the house bank of the Abu Dhabi government and, of course, very linked into the fossil fuel financing over the past decades. However, we are also looking into that. How do we achieve net zero? How do we support our stakeholders into the journey and transition towards net zero as well? So yeah, looking forward to this discussion.
Thank you. John?
I'm John MacArthur. Can you hear me? No. So I'm John MacArthur. I'm the Group Climate Change Officer at Abu Dhabi National Oil Company. I'm here to see how they're going to fund all the amazing things I want to do in ADNOC. I spent a lot of time working in climate, just about a year in Abu Dhabi, and already, I think Nick really captured what excites me most is how fast we can move. And the time I've been there, we've decarbonised all of our imported power with one fell swoop, thanks to having the nuclear and the renewables in place. And before this, I was Mr. Carbon in Shell, and I tried to get to be able to do that for quite some time. And I've been impressed by the bold vision, but it's not new. Nick will remember Sheikh Zayed had this vision as well back in the early 70s when we were the first company to invest in gas. Instead of burning methane as a waste, to turn that into liquefied natural gas when there wasn't technology, there wasn't a market. The finance was a big question, and there was the bold vision to be the first, and that's what happened. And even today, we have the same thing happening. We've already shipped our first blue ammonia to our customers in the Far East. So I am really interested in two things. First of all, there's a lot of shareholder-driven action that's helping to encourage groups like the Glasgow Financial Alliance for Net Zero to race towards net zero in 2030, and what are the new innovative models that are going to come from the banks on one side, but also on the other side, what we can do where there's other sources to money, sovereign wealth funds. We said Mubadala here today, ADQ, and the other sovereign wealth funds in Singapore and Norway, etc. How do we mobilize all the capital in places like Asia and other parts of the world, not just in the West, to really drive the change, because it's a global challenge that we have.
Thank you. Finally, Harry.
Thank you. I'm Harry Manistee. I work for Octopus Energy. So Octopus Energy, we are three things essentially. We are an energy supply company, electricity and gas. We supply over 3 million customers in the UK, and we're active in 10 countries. And we're also a technology company. We built technology to underpin that. We've got some world-leading sort of energy transition technology that sits behind our supply business. And we've grown very fast because of that. And also we invest in clean energy infrastructure. So that's where I work. I work for the investment team. We own 350 assets, mostly wind and solar, but some other technologies too. My role is head of energy transition investing, and that means actually looking at the stuff beyond wind and solar, as well as gluing them together with those established technologies, so things like hydrogen, storage, emissions capture, grid infrastructure. We're looking at all of those and trying to kind of grow our investment business with some of those investment opportunities, and really kind of looking forward to the discussion. I think there's a huge opportunity here, and I'll be sort of trying to set out hopefully some of the positive sentiment and excitement behind that, because I think that's how to look at it and that's how to mobilise finance. And there's certainly the opportunity to do that with the forthcoming, or already underway, but accelerating energy transition.
So Harry, maybe I can stick with you. How does one mobilise finance into this sector?
Yeah, great question. There's lots of it, to be honest with you. I mean, I've been working in core renewables, as we call it, so mostly solar for me. We've done lots of wind too for the last 10, 12 years. And that's gone from being sort of a niche area to now something where there's vast amounts of capital chasing projects. It's really not that hard to finance a wind and solar project now. It's established technology and lots of people want to invest in it. And that's great, really good to see. Moving on to some of the newer areas, and a lot that's been discussed today, like hydrogen and carbon capture, and actually a lot of the areas where there's potential for collaboration with UAE-UK. It requires a little bit of sort of getting your head around the risks and some of the complexities of the sector. But I think the money's there. People want to do it. For me, there's a kind of a link that governments can provide, a bit of risk underwriting in certain cases. For example, the CFD contracts in the UK, other mechanisms to just take a little bit of risk away from the initial investors, get people moving, and that can be an opportunity for governments. It's a big sort of multiplier effect if you do that. So I think there is a bit of a role for governments to play. There's plenty of money available, appetite for investment if that can be unlocked.
So we're talking about the role of governments. Rajat, what role do you think governments should be playing here in terms of sort of supporting the financing efforts?
I think there are a few things. There's certainly a very well-developed system on the carbon benefits every time you are taking carbon out from the ecosystem. But I would say, as Harry pointed out, I see renewables across as three parts of value chain. There is a technology which is tried and tested, which is mature, and that's a stage where you have to roll it out. And that's where I'll put solar and wind electricity generation, which is a great way to replace burning fossil fuels and other less cleaner sources of electricity production. Then there is a middle part where you take your existing infrastructure, and here I look at examples like refineries, which are in sites that were producing a certain kind of product in the past, but they are locations which have actually good infrastructure connectivity. And whether you turn them to fuels of futures in terms of biofuels, in terms of SAF, in terms of hydrogen. And then I would say there's a third element which is a bit further out and less mature, which is the hydrogen technology. So as you go from the less mature to the more mature to the less mature part of the value system, the risks are going to increase. And I think here the risks, I would say, are not just from financing perspective, but in terms of the economics of the projects, and these are projects take a few years to build, especially if you think about a mid to large scale project. So from a government perspective, I would say things like incentivizations in terms of subsidies, in terms of de-risking some of that, for both equity and debt providers would be a great positive in my mind.
Okay, thank you. Actually, I'm going to also ask Shagil and John their opinion on what government roles should be in this.
Yeah, so I think there's a couple of different things to think about. Well, first of all is to give credit to governments. The UAE was the first government in the region to ratify the Paris Agreement, to set a UAE net zero 2050 target, a lot of other things. So I think the first thing governments have to do is set the ambition. And that helps to set some of the ground for people to follow. Same thing here, we had conversations about CCC, the Climate Committee, having reductions in regulations here and actually in law. And so I think there's a role modeling role for the government to set in terms of where are we going, what's the pathway, and then support that with policy frameworks, with regulations. I see that in many different countries around the world, where that's the 45Q tax credit in the United States or carbon pricing in Singapore. So the governments are doing things. And what we have to do is work in partnership with those governments to find out how we can contribute. And I was founding chair of the Oil and Gas Climate Initiative, Climate Investments, which is like a $1.5 billion fund, put together by international oil companies mostly, and some national oil companies. And our aim there was actually to close some of the gap where the finance, it was a bit more difficult. Some of these things are really immature. How do you kickstart? How do you help those ventures which we need to succeed, but it's really hard to get started? And I think government has a role to play in that as well as industry. But there's also, I would say, patient capital, foundations. If you think about Breakthrough Energies with Bill Gates, you think about the Bezos Earth Fund, there's money coming from different sources. And what we should do is collaborate together to help get this started, to kickstart things, to drive the change, support some of those terrific entrepreneurs that have been discussed in the last panel. And I feel very positive about that. But at the same time, moving faster is a real challenge. So the Glasgow Financial Alliance for Net Zero, bringing together the companies around the table here to really drive the financing of the transition is essential. And just a final point is you think about the $8.5 billion committed to helping South Africa to phase out coal, and the governments who came together to try and do that. I think this making things happens at a government scale, not just an industry scale as well. So helping to decarbonise 120,000 jobs there is something that I think is really important. We need to find other places in the world where we can help that transition too.
Shakil?
Yeah, well, I think it's been said by Roger already, but just to summarize, I think incentives are extremely important to say that how can you ensure that the decarbonization happen. You've seen some very good examples in Norway who incentivize electric vehicles. I think more than 80% of the vehicles in Oslo right now are electric vehicles, which has happened under less than 10 years. So incentivization is extremely important. Communicating very clear targets from the government is important. When UAE went out and set the net zero target in October last year, we saw a very clear shift in our clients who now started to set out their own net zero strategies, which ensures that there's an alignment between what you want to achieve as a government, but also through the entities as well, which supports the financing part as well. It's very clear because one of the things you want to do as a bank is to have a very clear strategy from your clients. What is it that you're trying to achieve? What are the trends? How are you going to get there? So that supports as well. And the final part will be policy making. We need to have some very clear policies to say what is it that we want to achieve, what is it that we want to support, and how are we going to do that. And you need to find the right balance between that, whether it's done through taxonomies, whether it's done through enhanced disclosure requirements, but you need to make sure that you get the right policies in place to support the direction you have set.
So do you have some examples of some policies that you think would achieve or start to achieve that result?
I think you are seeing, from a banking perspective, a lot of different disclosures are being discussed right now. We have a lot of taxonomies coming, EU taxonomy taking the headlines. But I think recently I read somewhere that right now they're working on 40 different taxonomies around the world. So it can also become too much at a certain time. We need to have alignment across. We need to have a common definition that what is sustainable, what is green. So I think that we need to have disclosures, but we also need to be aligned, whether it's led by G20 or other relevant entities or organizations is extremely important. But I think that the disclosure requirements is going to help a lot. Today, one of the biggest challenges we have is that there is not a common understanding of what good looks like. And especially when you need to finance something, you need to understand that what do each entity have from a E, S, and G perspective. And if we just focus on the E, it's important to understand, do we have the same understanding of what is scope 1, how do you disclose scope 1, scope 2, and even if you get to scope 3, it's got even more complicated. So we need to get to that point, and that's why those disclosures are extremely important. And coming back to taxonomy, we need to have a common understanding of what a green looks like or what sustainable projects looks like. So I look forward to the recent initiatives from SASB and so on that when they get implemented at some point. And what will be important is that we don't use the same yardstick all over the place. We need to give people time to implement these regulations. UK have led on these disclosure requirements like they do on all kind of regulation. But while we in UAE are not as advanced on this, we still don't have a taxonomy, we don't have disclosure requirements coming from the regulators. So what is important that you give the countries the relevant time to implement these requirements.
If I can just build on that, I think I agree with John's point of 2050 has come out as the year, but that's still 28 years away. And I think one of the things, linking your earlier point about what governments can do, actually forcing the system to come with what are the steps, what are the baby steps you're going to do to get there in 28 years' time is extremely important. Some good examples that UK has done, and I think that helps the industry as well in terms of coming with regulations for what proportion of your jet fuel needs to be sustainable aviation fuel by 2030. Once you set that out as a policy, it needs to be evaluated that this is something which is achievable, will incentivize the whole ecosystem, whether it's the industry, whether it's the banks, whether it's the shareholders, that this is something which there is a great opportunity, the government is going after that, and you can make a progress. I think the second thing I would say is also, I go back to our own policy as HSBC. So while we've stated at the beginning of this year what we'll cut down, what we are not saying is we see this actually as an opportunity to help the clients to achieve their net zeros. And two areas which I would say, I think, disclosure is critical, not just for the industry, but even for the financial institutions. So we will be publishing next year our climate transition, policy, which would lay out how we will, and we are focusing very much on science-based, 1.5 degrees Celsius, and that's the approach we are taking. How we will measure it, how we will disclose it to bring down from 2030 to 2040 to 2050. And we'll be publishing it out there. So I think setting that sort of a global standard will certainly help. And I think, we used to have probably the same issue in terms of financial industry 50 years ago, when every company, different parts of the world, used to have their own way of calculating credit ratios and leverage. We all gradually came out to IFRS, and now everyone uses IFRS. So there's a clear guidelines. So I think that's a journey that we are on, but I can see that would be coming, in the next 5 to 6 years, where everyone, who has to approach market for capital, whether it's equity or debt, will have to come with that disclosure.
So yes, I know that many lending institutions are now putting a cost of capital on whether, depending on whether you have disclosures in place or not, and the quality of them. Harry, is that something that you're seeing when you're looking for financing?
Yeah, people are definitely factoring it in for sure. It's. I think ultimately investors are looking for robust financial case, risks well managed. I think it's more demand for really granular sort of ESG metrics. There's been a bit of greenwashing potentially going on, and I think investors really want to see beneath the surface to make sure you've got a rigorous approach to ES and G. I think sometimes, to be honest, in the green sector, we're a little bit guilty of thinking, well, we've covered E clearly. A solar project is great, but there's deeper aspects of E, and there's the social side of it, jobs, local jobs, etc. Governance is really important. Safety is crucial for us, big issue. So there's definitely more work we can do to kind of provide more information. I completely agree with the point about consistency and the kind of IFRS analogy. That's what the markets need. They need stuff distilled into kind of comparable, consistent formats so that people can process it and compare easily. And that's happening, and that will really help when it comes together.
Do you offer, does HSBC have different lending rates depending on the disclosures that are being made by the underlying
So I think
clients?
Disclosure is something that, we are working on. As Harry said, that's something industry is getting to. But I would say over the last few years, we've already done financing facilities, which has actually a benefit. In the past, for example, if you go from, credit rating of X to Y, there was a lending, we are already seeing facilities being done in UK, especially North Sea. I think, I wouldn't name the client, but we did that about 2.5 years ago, where if over the 3-year trajectory they cut down their emissions by X%, there was actually a discount they were getting on their lending rate. So that's certainly something which is coming. And I would say today, in the last, and I will use UAE as an example, we've been, fortunate to be active around some big situations with ADNOC drilling, and ESG is not a choice. It's actually the first question every investor meeting we are having. When you go out to raise capital, people are saying, tell me about your ESG policy. And it's not just one page in a 30-page document. It's front and center of that. So it's difficult to quantify what benefit it's giving to the bottom line. My view is it could be 0, 1. So if you don't have an ESG policy, the investor says, and the reason that's the case is because if it's step back, even those portfolio managers, their organizations have signed up to a net carbon zero trajectory, which means they're looking at their current invested portfolio to say, what's my portfolio's carbon footprint? And if I have to bring that down, you don't want to add something which is going to creep up. They actually want to see that you're on that journey. So I think from that perspective, the financing community, both on the capital markets as well as in the banking community, is quite aligned that you need to have a transition plan. And that's where we work, especially when some of these IPOs, when companies are going public, we actually work with them to say, let us just test that what transition plan you're going to advocate to the world, is that credible?
John, you mentioned that you were Mr. Carbon before. What role do you think carbon markets can play here? Compliance markets. I think UAE is currently thinking about implementing a compliance cap and trade versus the voluntary carbon markets. Do you have thoughts on that?
So it's really great to have you, Anna, here moderating with Respira's background in this. I mean, I was fortunate to be involved with the team that incubated nature-based solutions in Shell and built a lot of the things that you're describing, and doing the same in the UAE, working with Abu Dhabi Global Markets and some of the banks here to set up the first regulated carbon market. I think for people here who don't know about carbon markets, there's two different kinds. One is the compliance one, like we have in the EU emission trading scheme, where it's regulated and there's a pretty strong governance around it. And then there's the voluntary carbon markets, which less regulated, although there's standard bodies and things like that, which my big wish from Glasgow, by the way, was that we would have Article 6 in the United Nations agreement, which would set the rules for interoperability between countries. So those who've got big sinks were able to trade with those who had a lot of carbon, and that would make it more efficient and lower cost. But so that happened, which is good. It'll take a while to really get in place, but that was really good for international kind of carbon markets. But then for the voluntary side, which is the kind of private sector, where you have this great opportunity to invest in carbon reduction projects that can happen right now, so that you're doing something to bring down emissions. That's got some way to go in terms of maturing it. A lot of the projects are relatively cheap because they're avoiding emissions by stopping things happening rather than actually physically reducing emissions. But the higher quality carbon credits are coming, and there's a lot of projects that are out there where you're really making an impact. And I think that some of the maturing of those markets, there's a big initiative chaired by Mark Carney just now, who did a lot of the task force for climate-related financial disclosures, now turning to carbon markets as well, with everyone around the table who are kind of experts, including the standards bodies, looking at how do we really improve this and make it robust. So I'm feeling like that's starting to really come of age now. And when you invest in voluntary markets, you can be assured that you're making an impact. But there's still some work to be done there so that we have that transparency around carbon markets.
Yes, no, that's right. I mean, we were talking earlier about what do we need to do in the next 5 to 10 years, supporting avoidance. Nature-based projects in the global south is something that we can do right now with immediate effect. Harry, do any of your projects rely on carbon financing?
No, I mean, not so much. I mean, obviously, ultimately, it kind of feeds through to the electricity markets. Carbon-intensive electricity pays, in the EU at least, and other countries too, pays a premium. So it does feed through indirectly, but we don't directly use carbon financing at the moment. But it's an interesting area. I mean, ultimately, yeah, we're keen to finance good quality projects that have got appropriate revenue streams, and if carbon's one of those, that's interesting. There's a way to go, I think, on some of the kind of credit kind of establishing the global mechanisms for that, but it has to happen. It's got to be part of the solution for sure.
Yeah, I just wanted to add. So Octopus is really good at connecting into communities.
Yeah.
And having this conversation with their customers. I mean, I'm not a customer of Octopus yet, but I know you. But then
let's talk later.
I live in Abu Dhabi, so you've got to expand. But I just wanted to say that the avoidance credits, what they're doing is they're putting money into communities so that they don't chop down the forest, because that's their only choice. So there's a sustainability goal, development goal aspect to that, which is positive. I don't want to come out giving the wrong message here. At the same time, helping them also to be able to see opportunities at growing something that reduces carbon is an addition to that as well. Both are really important. But what we need is companies like Octopus who really get at how to communicate with people, how to do that in different places around the world. I mean, you're in other countries as well now. I think that bringing some of that real behavioural knowledge and connecting to people in conversations would be very powerful too.
Thank you.
So I'm going to ask a slightly, not a derailer question, but are you talking about electricity markets and Octopus's ability to communicate? Harry was telling me earlier that his mother rang him up and said to him, why has my electricity bill gone up? You know, you're in solar and wind. Why am I paying so much money? You know, this isn't gas, this isn't oil. So why is that? And should there be a decoupling in energy pricing now?
Yeah, my mum wants to know too.
Well, for everybody who wants to know and their families that want to know, yeah, great question. And by the way, I'll give a version of the answer I gave to her, and she was not impressed. So hopefully I do better here. But you're absolutely right. At the moment, in the UK and other countries are very similar. You know, electricity pays on the clearing marginal cost. So gas typically sets the price and is largely setting the price at the moment. And obviously that means renewables projects are getting paid a price that's much higher than arguably the cost for those projects. So look, I think it's better for the energy transition and markets do change towards reflecting the real cost of the underlying technology. It's complex. Renewable projects are not free. Yes, once you've built them, the resource is very, very cheap, if not free. The operational costs are low, but you have to pay for the upfront capex. So it's just a different business model to a gas generator, for example, and you have to recognise that. So, and it's really, really complex reforming and unpicking markets, but it would certainly help. But I mean, just a quick comment, if I may, on the cost of electricity and just going back to the UK UAE sort of link. I mean, the UAE has some fantastic solar resources. I mean, I've been doing solar for a long time, and I believe still the world's largest solar project, or soon to be 5 gigawatts. That's an incredible project and sort of global leadership, and it's really, really low cost. And I think that opportunity, I think it's scheduled to be 5 gigawatts. You know, why not 25 gigawatts? There's going to be plenty of demand for cheap electricity, cheap hydrogen, potentially even emissions capture coming from that. You could potentially even export the electricity to other countries. So there's a huge opportunity there with a proven technology. And I think that's one of the examples of a really exciting investment sort of prospect for the energy transition that could be a collaboration between the UK and UAE. I mean, the UK has kind of got some skills and experiences in areas of innovation around energy technology, as has the UAE. Both global leaders in various respects. So I'm sure there's a lot that can be done together.
And what would be the challenge in getting that done? Would it be the funding or financing of such a project?
Probably not. I mean, yes, 25 gigawatts is quite a lot of money required for that, to be fair. But there are vast amounts of capital out there to build projects. In both countries have large capital markets and funding available. I mean, it's complex to build a project of that scale. No one's done it before, but it's not insurmountable. All the building blocks to do that, I think, exist at the moment. So I'm sure it could be done.
And is it the same? Is the financing of more sort of newer technologies or less proven technologies, such as direct air capture?
I would say no. I think I'm not an engineering expert, but I would say that for solar, it won't be. It's like, you know, if you go back, I look in the fossil fuels analogies, the LNG project, you know, how big was the first LNG project done, you know, 25, 30 years ago, and what, you know, Qatar just announced yesterday, or, you know, so I think, to me, it might be more the engineering design, how complex. I think capital, there is more capital available that the system can use in this space.
But for newer technologies as well?
I think for newer technology, yes. You know, so I think for newer technology, you know, again, if I go, you know, from that 3 buckets, you know, if you're on the right-hand side, you know, something totally new, you know, you are actually then in the equity risk category. And at that stage, what I would say is there is a lot of private capital also available. I mean, we as a bank have gone in, you know, to also committed to the Bill Gates, you know, Breakthrough Energy Ventures. So the capital is available, but you're going to a different part of the cap structure from debt to the equity side. Higher the risk, you know, more it's equity kind of returns people will be seeking. But I think capital is available, and we are, you know, working on a few things as we speak. I think one of the transactions we led in this country, in UK, was, you know, the Rolls-Royce small modular nuclear, you know, electricity. You know, again, it's a new technology. So it was, you know, and this first plant will not be up and running until 2027. But clearly the engineering, you know, skill set, the partners who are there, so there are, you know, 3 different stakeholders. I think the government also came. So there is certainly capital available for new technology. It depends on what's the time horizon, and is this At what scale can you commercialize it?
I would like to open it up to questions. Yes.
Thank you. William Davey, Precision Impulse. I agree with the power of the market. It's probably a way to solve the question of what's the cheapest way to solve a complicated problem. When you're dealing with a colorless gas and you say you're burying it more than 1,000 meters below ground, there could be a tendency to sort of cheat the market, say you're doing something and maybe not doing it. Do you think where do you think we are with status of technology for monitoring and verifying CCS?
John, do you want to take that?
Yeah, so one of my earlier lives, I led all this technology for Shell. I was also involved in the Energy Technologies Institute in the UK, where we asked those kind of questions and came together with companies like Rolls-Royce, actually, with terrific Paul Stein, who's involved with the SMR stuff. And we wanted to test that, particularly offshore, because if you start to store CO2 offshore, you need to know that it's going to stay there. Now, there's a good chance it will if you're putting it into oil reservoirs, because that's what kept it there for the millions of years before we drill into it and get it out. But then you also need to look at other kind of stores, such as down dip in aquifers, things which haven't stored oil over time, and make sure that that's safe. And then how do you monitor it on the seaboard, on the seabed, etc. The short answer is of course I know your company, and I think there's a lot of technology, the kind of thing that you're doing, which is bringing some of the knowledge from our North Sea expertise on seismicity and also monitoring seabeds and things like that. 4D seismic requires you to have sensors on seabeds, and also things like gas detection. And now for methane, you've got everything from satellites. So satellites going up, you can almost have a Google Maps for methane and flaring around the world very soon. And not just satellite level, but air-based, land-based, and then offshore-based as well. So all the technologies are there. In countries like the UK, this is something that had been looked at for a long time. Can you monitor, report, and verify that emissions are stored? Because a really important thing is that you have to always have public acceptance. So we've seen before where in our industry, we thought we had the right technical answer, but the public didn't accept that. So it's really important to continue to do that, something that we'll learn in the Emirates. We have a lot of expertise in, and we've learned from using the right kind of oil and gas standards, etc., to keep people safe. This is the same kind of thing.
Sorry, is it Luke? I'm trying to remember your name from before, and then I'll take your question.
Yeah, Luca Corradi from the Net Zero Technology Center. Thank you very much. I mean, John, you mentioned your expectation for COP26 and what came out of it. I know COP27 hasn't happened yet, but COP28 in Emirates is literally behind the corner because there's a few months. So I'd like to know from the panels, what are your expectations for COP28, especially from a financing of the transition perspective?
Well, let me go first then. I'm involved in some of that stuff. Interestingly, so I actually ran operations for my previous employer in Egypt for 3 years. So actually, I really care about what happens in Egypt. And the first thing I want to actually be respectful of the fact that Sharm el-Sheikh is hosting that first. And I believe that over the last few years, because of circumstances in COVID, etc., a lot of the COP has had a kind of Western, global North kind of location at the very least, although people try to look at the whole world. I think this opportunity in North Africa to have a nation host it who is more representative of some of the people that are going to have it more difficult to get transition finance. I think that's the opportunity to do something a bit special. I know that GFANZ and others, banks, etc., are working together with the Egyptians to see what can be done. But I gave you the example of South Africa earlier. What's the transition finance to help reduce flaring, fugitive emissions in the onshore and offshore oil and gas operations in a country like Egypt, and how can we help them? I think that's really exciting. And building upon that, there's a more global point about the common but differentiated responsibilities. just the final point I want to make is we often look at net zero and forget that actually it's an average. The India net zero and the China net zero are not 2050. They may come earlier, but there's other countries out there that really are in a very different financial position who net zero is going to come a lot later. What can we do to help them? And many of them are the ones who are going to be most exposed because of their inability to respond to changes in their climate. So I think that that theme is something we'll start to see come out more. And I think that my big hope for COP28 in Abu Dhabi is that we will continue to build on that really inclusive approach, and that we'll be able to join many of the dots, connect the dots, so the finance side, working with the government side, working with industry, including our own industry, but also all the demand side, the people that need to buy the new energies, to really connect many of those dots as well. That's what I'd like to see happen.
I'm just going to take, did you still want to ask a question? And then I think we'll wrap up. Sorry, Shaka.
Yeah, thank you. Andy Webster from KBC. So maybe continuing in this theme of the consumer hat, I guess I was struck a little bit earlier when from BP the comment was given, that we all will need to pay a little bit more. And I think in the short term, certainly for the UK is going into a high inflation period. I think putting my UAE hat on, we've just seen fuel prices double in the period of months. And that's going to start to have impact in where people spend their money. So thinking about the financing side, is the business model where the consumer is paying in the short term really the pathway to achieve some of our goals? And if not, what else can we do with financing to actually target maybe more the institutional investors versus the end consumer to pay for this transition?
Shaka, do you want to take that, or Harry?
Happy to. You go first.
I think it's important to remember that it can't be the consumers only who will need to pay for this. I think you need to have all the different stakeholders come together and finance this transition. I think the financial sector needs to play its part. I think we will at times, just coming back to the other question as well from COP28, we will need to discuss the risk appetite in the financial sector as well, because the risk appetite matrix you used previously for well-established technologies and so on cannot continue if you need to finance that transition. So the financial sector will need to take their part of this transition as well and finance and probably take higher risk than they have done previously. That is something we will need to look into. I think that you will also need to have some government part to go into it as well and say, we can't put everything of this to the consumer side. How we exactly get there, I'm not sure that we have the full model, but I do think that we are moving in the right direction. We've seen the GFAN, so the Net Zero Banking Alliance, where I think more than 70% of the world's banking assets right now have committed to becoming net zero. Now the next step will be that how do you then go from these big commitments to actually concrete actions, right? Because all the different banks, HSBC, Rajat mentioned their targets. We've put targets as well to finance and support in financing sustainable projects. But how do we get there? Because I still get a lot of questions, why can't we get financing, right? And we feel that we have all the capital available. So somewhere there is a mismatch here. And honestly, I don't know where the mismatch is, but we need to find that mismatch. And then I think it's going to lift some of that financing that are some of the things which the consumer pays for today will need to be shifted to the other paths from that path.
Did you want to
I think maybe if I can just add to that, clearly the commodity prices that we're all seeing today, I would say that, and this, some of this has been driven also to large extent. We're seeing more of that in Europe than rest of the world, given the increased reliance we discovered that we had on one particular country in terms of our gas imports, less so for liquids. But I guess the second element to think about is from an energy industry perspective. During the COVID that we had, this industry went to negative oil prices. So clearly, I think here I would put the financial sector overall, including the institutions, because, if you think about the energy industry investors, a lot of them are institutional investors who always cared about dividends. So while we were in that low commodity price environment, there was a real challenge the sector had in terms of how much capital they return to their shareholders and how much they deploy in this future transition, which, as Harry said, it has a big upfront cost, and it takes some time. So now I think while industry has gone back to a level where it's producing again record cash flows, it gives them actually no excuse to say that we have the capital to satisfy both our shareholders and invest for the future molecules. And I think you can see that across, whether it's BP, Shell, all the IOCs who are now no longer just oil and gas company. They put themselves as energy players where they said, I will supply the consumer molecules that they want to choose. And to some extent, I would say, especially in UK, Europe, or broader in the US, I think it has been encouraged by the government. I would say there are certain countries, especially in the emerging markets, where the cost is higher. I use Brazil as a classic example where you have ethanol-based, product available at the pump, but as a customer, people choose which one is cheaper. And I think in this, UK has done a good, especially in London, where you see the government came with policies to say, you cannot drive, vehicles older than this level, or you'll pay a surcharge, which force consumer behavior to shift. So I think it will be a bit more dynamic, but I agree fully with, that everyone will have to bear a cost, the financial sector and the consumers and the governments to some extent.
Do you mind if I just jump in very briefly? I will promise I'll keep it brief. I kind of disagree with that, to be honest, because I think it's the wrong way to look at it. I mean, if you look at solar in 2010, the forecast for the cost of solar in 2018, even Greenpeace, who perhaps had a bit of an agenda and wanted to make it sound like it was going to be super cheap, got it wildly wrong on the underside. It was way cheaper than anyone anticipated. And if you look at these new sectors, be it hydrogen, probably the main one, but other ones like emissions capture, perhaps relevant to the discussion today. If you get the scale behind them, the cost will come down rapidly, and that will save money for consumers in the future. Frankly, it's really hard to tackle the problem now for consumers right now, because these are big projects that take a long time to kind of transition the industry. It takes time. But if you start betting big on these technologies now, consumers of the future will have a clean, cheap, affordable, secure supply of energy.
Well, I think on that very positive note, thank my panelists.
Get your checkbooks out, boys.
Yeah, no, always ready, always ready.
Thank you very much. Thank you.
Well, thank you very much for that really enriching and feisty discussion. So thank you very much. We're almost at the end of the day. In a minute, I'm going to ask Lord Udney-Lister just to say a few closing remarks. But first of all, I'd like to pass on my thanks to my team, Paul and Sally, who are here at the back. People are always amazed that the Business Council only has 3 members of staff. And that's partly because they work about 26 hours a day, but they've been working really hard to put today's event together. So thanks very much, Paul and Sally, for the amazing work that you do. We've also been joined today by 2 event assistants who've been helping us. They're at the back. We've got Alexandra Oroskina, who is just completing her HND in event management at North East Scotland College, and Ida Wengler, who is working through her MA in English and History at the University of Aberdeen. So thanks to you both for all of your support today in making the event flow smoothly. A round of applause to them as well. And finally, 2 more thanks. I'd like to thank Adam, who's been at the back there doing all of our AV today, done a fantastic job. And as I mentioned, we will be posting the full recording of this on our YouTube channel as soon as possible. And we'll be posting photographs as well. And feel free to replicate that through your own social media channels. And last but not least, I'd like to thank the staff of the Marcliffe Hotel as well for feeding us and looking after us and providing such good hospitality. So one final thing, I'm going to be inviting Lord Udney-Lister now to say a few closing remarks, and after that I'd like to invite you all downstairs to have some refreshments before you head on home on your hydrogen-powered buses or hydrogen-powered aircraft maybe. Or, and if any of you are attending the EEC event tomorrow, we'll be there, so I look forward to networking with you some more there tomorrow. So, Lord Udney-Lister, over to you. Thank you.
I promise to be really quick because I don't want to keep you away from Brad's drinks, which he's been saving himself to make that announcement. Look, I would just want to say thank you to all of you. Thank you for coming along. Thank you for supporting this. We're on a journey to COP28. The Business Council, we think it's really important that we are on that journey, that we're part of that journey, and that we're trying to help the UAE with deliverables when the time comes. So thank you for coming. There'll be some more events. We'll keep in touch with you. And for those of you who are members, thank you. For one or two of you who aren't members, Brad will happily sign you up. But anyway, thank you all very much for coming.